Okay, everybody. I got a question today. Let's see if I can see my whole head. I got a question today. It is Saturday, the 6th. Let's see if I can get my hair straightened out. It's Saturday the 6th, and it's 20 after 6 in the afternoon or evening. Let me see. Joel texted me today. I hope you're having a wonderful weekend. Can you please help with number 1 in chapter 4? So I'm going to zoom over to chapter 4 here. Let me get in Canvas and counting. He sent me a picture of the problem, but I'm not going to be able to open it up. It's one of those HEIC images, and I've got to go on my Windows computer here and figure out how to do that. I just don't know how to do it, so I apologize. But nonetheless, I'll go on McGraw Hill and I'll show you all the answer to this problem. Just so, and maybe I'll go through chapter 4 so that we end up having chapter 4 up as a YouTube. Chapter 4 homework, there it is. That way you don't have to chase it on Monday. Or maybe some of you will have it done. Wouldn't that be special? Okay, there's number 1. Now, remember, I'm going to move me out of the way here. I'll put me up over in the corner, up top, so you can see this. And I'm working with 2 screens. So if it looks like I'm looking over there, that's why. But you can see this is one of those long problems. And his numbers will be different, or your numbers will be different. But nonetheless, here it is. Now, let me see what he said in particular. Maybe I can show it to you. I hit a brick wall and would like some clarification as to what I'm missing, specifically for July 24th and July 30th. Okay. So if I could see this as a picture. July, I wonder if you can see it. No way. Oh, well, kind of. July 24th and July 30th. Let me try something else. Watch how this is. This is me figuring out how to do this on the fly. Make me big, yikes. And then make this kind of big. So July 24th and July 30th, I think are there. Okay, let me see what I got now. Let me look at this. July 24th, he has, wow, I need my glasses. That's really tough to see. So you might want to send me, if you're going to send me screenshots, well, I guess this is okay. No, I can't see it. It's not clear enough. I got to be able to download it and move it. Okay, but anyway, for your information, here's July 24th, AP late, accounts payable, merchandise inventory, and cash. So let's look here. Paid late on the 24th. The balance due net of discount. Oh, okay. On the 24th, they paid for whatever it was. What day was it? Purchased merchandise for $2,500. With the terms of 2% 15, net 60, FOB destination, invoice dated July 9th. Okay. So on July 24th, invoice date July 9th, and what was it? 2% 15. So 9 and 15 is 20, 9, 19, 24. So they paid it on time. So they get the discount. But they also returned some of it, 500 accounts payable, late merchandise inventory. So you see up here, they returned $500. So you take the discount only on the 2,000, and it was 2%. 2 times 2 is 4. It's $40, and you would reduce your cash with a credit of 1960, right? So then the other one, July 30th, is received a balance due from Artco for the invoice dated 19 net of discount. So that was July 19th. Sold merchandise, 1,200 Artco for $1,800 under credit terms, 215 net 60. So 2% 15, and that's Artco. 2% would be 24 30th, 1470 30 is 1,500, right? Accounts receivable Artco, is that $1,500? I'm looking. Purchase merchandise, sold merchandise. Sold merchandise that cost to Artco for $1,800. Gave a price reduction of $300, so it's $1,500. So that's why this is $1,500 on the 30th, and 15 times 2% is $30. So you got the sales discount and the cash. Debit sales discounts, a contra account. And then you had this accounts receivable reduction with a credit. Your AR reducing that AR with a credit. So does that make sense? I hope so. And let's move on to any other questions on that one. There's no explanation save for this here, which shows you these discount, how the math works on the discounts and inventory, sales discount, merchandise inventory, sales discount. Okay. Clear as mud. Good. Numero dos. Number 2 is a Valley Company's adjusted trial balance of August 31st. I should go like this. So I'm not out of the shot. Trial balance of August 31st. Categorize the following accounts for selling expenses. I think we did this one in class. I'm pretty sure we did. Maybe not. Beginning merchandising is 34,298. Supplemental records of merchandising activities for the year reveal following itemized costs, merchandise, discounts, returns and allowances, and transportation. So the first requirement, net sales for the year, is that sales minus discounts, returns and allowances gives you the net sales. And then in number 2, requirement 2 is compute the company's total cost of merchandise purchased. This is the wholesale cost, if you will, right? So invoice cost of merchandise purchase discounts, purchase returns. So you got to keep straight what side of the transaction you're on. That's what they want to trip you up with. The cost of transportation in gives you the total cost purchase. Here's the explanation down here. That's for is that for requirement 3? Yeah. This is for the COGS. Okay, so 3 is COGS. And you're making a little income statement. Remember, revenues minus expenses. That's it. Sales, discounts, returns gives you the net sales. And the cost of goods sold is your cost of your inventory. Well, how do you do all that? Cost of goods sold is the one that's going to trip everyone up. 112,026. Well, how did I get that? I said, well, we had a beginning inventory, right? And then we added merchandise purchased from part 2. And then we had this merchandise available for sale, which was 154,526. And then our ending inventory, 42,5, leaves us with the cost of goods sold. That's the cost of the goods that went out the door. If you were Target or whatever. Here's requirement 4, which is prepare a single-step income statement, including these expense categories. So we've got net sales and then net sales, right? Net sales. Okay, and which is net of cost of goods sold. It's net of what the inventory cost us to get in the door. You sell a shirt at Target. Well, that you didn't get that shirt for free. You didn't manufacture it in the back room. It came on a truck from somewhere, your distribution center, but ultimately Target bought that shirt from elsewhere, maybe a manufacturer in China or here in the United States, doesn't matter. But that inventory costs something. And so your net sales are your sales net of the cost of inventory, the cost of goods sold, COGS, COGS, COGS. So then after we get that net sales number in a single step income statement, we then take out our expenses. And what are our expenses? Cost of, in this case, they have as an expense COGS. Selling expenses, SG&A, we call that. And then they have general and administrative, right, SG&A, all three of those together. That gives us a net income of 32,364. Okay. So net sales, and then they hadn't added the cost of goods sold yet. So you got to subtract that out. And here it is down here, cost of goods sold. How do you get that? Again, beginning inventory, total cost of merchandise purchased from part 2, merchandise available for sale, and then the ending inventory gives you this COGS number, which is what you're after. Hopefully you get the logic of it. That's the big thing, understanding that logic. Okay, and we're on number 3. 3 is the same thing, only different. Adjusted balance sheet, its fiscal year end follows. Here it is. It categorized the following accounts and selling expenses, salaries expense, rent expense, all these things. Here they all are listed out. And then it says prepare closing entries as of August 31st using perpetual inventory system. So you don't have to fool around with periodic. Okay, so we had sales. Our sales go to our income summary. Our sales are, let's see, right, 226,600, right, and we credit our income summary, and eventually we're gonna debit our income summary retained earnings. Okay, but here on August 31st, we're going to debit our income summary, 175,850, right? And we've got sales discounts and all these things, discounts, allowances, COGS, expense, right? They all go here on the credit side. So we end up with an income summary with 50,750, and of course you want to subtract out your dividends to get to a net income. No explanation needed there. So number 4. This one has a couple of different tabs, but unadjusted trial balance is given, and we've got some additional information. Pay attention to this. Store supplies still available. See, this gives you your ending inventory of store supplies. Insurance, administrative expense, 1,600, right? So requirement 1 was prepare adjusting journal entries. We backed into these supplies expense. You can see how they did it here, right? Insurance expense here, and then inventory for shrinkage. What's shrinkage? Well, either they went out the door, employee theft, or rotted, or got stepped on, or something broken, all of that kind of crap. And then it gives an idea of your selling expenses here. So that's requirement 1. Prepare this adjusting journal entries. 2, this is a multi-step income statement, right? Cost of goods sold was the one, 40,200 is 38 plus 2,200 in shrinkage. Okay. Right. 40,200. Yeah, it goes into your cost of goods sold because it's gone, and so it's part of doing business. Whatever the hell happened, whether it was, again, it got broken or stepped on or whatever happened. And finally, the income statement. So you had to back into your selling expenses and your G&A expenses. That way, you added those together. Simple enough, I think. Okay, what do we got? Oh, that was 4 to 6. Yeah. All right, and that should be the whole chapter. And I'll see you all on Monday. If you have any more troubles, give me a jingle or send me a text or whatever you want to do, and I'll go over it. I'll go over it again. Hopefully, this takes care of this chapter. So I'll see you Monday.